You know all that confusing finance stuff? Balance sheets, cash flow, P&L statements? What if you could finally actually understand it all just by thinking about a simple lemonade stand? Well, that's exactly what we're going to do today. We're taking a childhood classic and using it to make these big, complex ideas click once and for all. So here's the big question we're tackling. Is it possible? Can one tiny business unlock the secrets that power Wall Street and every company on the planet? I'm betting it can. And by the end of this, you'll be able to look at pretty much any business and see the lemonade stand hiding inside. All right, so here's our game plan for today. We're going to start with the business itself, our lemonade stand. Then we'll meet the three big players, the P&L, the cash flow statement, and the balance sheet. And then, and this is my favorite part, we're going to see how they're all connected, how they talk to each other. Ready? Let's dive in. All right, first up, a simple lemonade stand. The story, as it often does, begins with a simple idea. So I want you to picture this. You're starting a business. Your parents lend you 1,000 rupees as a sort of seed fund. You take that money, you go buy all your supplies, lemons, sugar, cups, the whole deal. You set up your table and the price is set, 20 rupees a cup. And just like that, a business is born. Okay, but wait. You've got money coming in from sales, and you've got money going out for all those supplies. So how on earth do you keep track of everything? Well, this is where we meet our three best friends, the financial statements. Seriously, think of them as three different storytellers, and each one is going to give you a totally unique perspective on how your business is doing. And our first storyteller is the profit and loss statement, or as you'll usually hear it, the P&L. Its entire job is to answer the biggest, most fundamental question in business. Did I actually make any money? The easiest way to think about a P&L is like a report card for your business. It covers a specific amount of time, like 1 day or 1 month. It just lists all your sales, subtracts all your costs, and then right at the bottom, it tells you if you made a profit or a loss. It's really that straightforward. Let's make this real with some numbers. Let's say you have a great day and sell 100 cups. Okay, at 20 rupees each, that's 2,000 rupees in revenue. Awesome. Now we subtract your expenses, say 500 rupees for all the ingredients. So what's left over? A tidy profit of 1,500 rupees. Looks fantastic, right? So congrats. Your P&L says you're profitable, you're a business success. But hang on a second. There's a catch. Just because your P&L says you earned 1,500 rupees, does that mean you actually have 1,500 rupees of cold hard cash in your pocket? The P&L doesn't tell us that, which brings us to our next storyteller. And that leads us perfectly into our second section, the cash flow statement. This one's job is to answer a very, very practical question. Where is my actual money? I mean, the name says it all, right? It tracks the actual cash that's moving in and out of the business. The best way to think about it? It's literally just like opening up your wallet at the end of the day to count how much cash you really have. It doesn't care about promises or IOUs, just cash. So let's see how this plays out. Remember that 1,500 rupee profit? Well, what if your friend came by, grabbed a few cups of lemonade, and said, hey, I'll pay you tomorrow? Your P&L still counts that as a sale, but the cash? It's not in your hand yet. So even though your profit is 1,500, the actual cash in your wallet is only 1,100. See? Profit and cash, totally different story. And this right here is one of the most crucial lessons in all of business. A company can look incredibly profitable on paper, but still go bankrupt because it runs out of cash to pay its bills. It happens all the time. And that's why you'll hear it over and over again from any successful business person, cash flow is king. All right, on to our third and final friend, the balance sheet. If the P&L is about performance over time and cash flow is about the movement of money, the balance sheet is different. It's just a snapshot in time. It answers a really simple two-part question. What do I own and what do I owe? So if the P&L is a movie, the balance sheet is just a photograph. It freezes a single moment. And it's broken down into three simple parts. First, your assets. That's all the stuff you own, like your cash, your extra lemons, even the table. Then your liabilities. That's everything you owe, like that loan from your parents. And finally, your equity. That's the part that's truly yours. And this brings us to the golden rule, the one equation that holds the entire world of accounting together. It's simple. Your assets must always equal your liabilities plus your equity. What you have must be balanced by what you owe to others and what you owe to yourself. It has to balance. That's literally why it's called a balance sheet. Okay, so we've met our three storytellers, we know what they do, but the real magic, the part that turns this from an accounting lesson into a real skill, is seeing how they're all connected. You're about to see how one single action sends a ripple through all three statements. Let's watch this in action. Imagine you buy 300 rupees worth of new lemons. Okay, what happens? Let's trace it. First, on the P&L, your profit goes down because that's an expense. Simple enough. Second, on the cash flow statement, 300 rupees in cash physically leaves your business. And third, on the balance sheet, well, your cash, an asset, goes down, but your inventory of lemons, another asset, goes up. See that? One move, three different stories. Now, here's a slightly trickier one that stumps a lot of people. What if you buy a new table for your stand for 300 rupees? Okay, cash flow is easy. Cash goes out. But here's the question. Is it an expense on your P&L? No, it's not. It's an asset, an investment. So buying it has zero immediate impact on your profit. And this right here is the absolute clearest example of why profit is not cash. So let's bring it all home and talk about why any of this actually matters. Because understanding this connection isn't just a neat trick for accountants. It's basically a financial superpower. So if you're going to remember anything, remember this. The profit and loss statement is the movie. It shows you performance over time. The cash flow statement is your wallet. It shows you the real, actual money. And the balance sheet is a photograph, a snapshot of where you stand at one exact moment. And that's the superpower, because once you really get how these three pieces fit together, everything changes. All those tricky finance questions in a job interview, suddenly they're not so scary. You start making way smarter decisions in your own career or business. And complex ideas like financial modeling, they actually start to make sense. You see, finance isn't some secret, complicated code. It's really just a story. And all you need is the right way to hear it. So the next time you feel lost looking at a spreadsheet, just take a second and picture that little lemonade stand. Because if a 10-year-old can master this, so can you.